Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a great company that has been giving dividends the past 19 years. Simply Wall Street says that it's 55% undervalued, and the last 5 years it has been growing dividends 6%. So if you're interested in learning about this company, stick around. Hope you like it. However, if you are new to the channel, I just wanted to say aloha. In this channel, we talk primarily about dividends, about dividend investing. So if you want to learn about which companies are great in terms of dividend investing, and you want to learn about other companies other than the popular ones, hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on the new videos that I put out. With that said, let's take a look at this company. So this company is Flowers Foods. The ticker symbol is FLO. This is a company that engages in the manufacture and sales of bakery products. So if you go to their website, you can see a little bit more about the company. There's a video in there, but they're the leader in the US bakery industry. So the company has about 9,200 employees. The sales are about 4.4 billion during the 2020. So they have brands such as Nature's Own, Dave's Killer Bread, Wonder, Can Your Bacon, and all that stuff. So if you go to their website, you can see a little bit more. As you can see, these are just some of their popular brands. Yeah, so you might have used some of these. I know I've had Wonder, and then you can go to Costco and you can get this in my Costco regions. Pretty good brand. Now if we go to their presentation, one of the things I like about it is they talk about focusing on environmental stuff. So they have like a 2025 goal of reducing greenhouse gas emissions, reducing water use, achieving zero waste to landfill. So this is good to see that a company is thinking about the environment. So I think that's pretty awesome. Now if we swing over to Simply Safe Dividend, based on their dividend safety score, they're rated at 62, which is safe. The dividend yield is 3.32. Market cap is about 5 billion, which is considered a mid cap. Now if we go over to the key metrics, you can see payout ratio is about 67. During the recession, they have increased their dividends, and again 19 years of consecutive dividends without a reduction. So if you go through the dividend growth, the last 10 years 8%, last 5 years 6%, and then the latest is 5%. So moving along to the dividends, you can see here 19 years without a reduction. So pretty good, pretty solid one. 19 years of consecutive increases. Payment details: you get paid quarterly, March, June, September, and December. The annual payout is about 84 cents. Ex-dividend is March 3, which has passed, and then you get your payout date of March 18. Now moving along to the financials, you can see earnings payout ratio 65, free cash flow payout ratio is about 89. Going along to the total sales in billions, so you got that, outstanding millions. Return on investment capital, it's about 13%. Return on equity, about 15%. So I would like to have seen this a little bit more higher, like 15% as in the past in the 2014 and 2012. So we'll see how that goes. You can see the free cash flow margin, operating margin, net debt to capital. So a little, you can see that. Now if we swing over to tip ranks, so if you can see, based on their smart score, they rate 7 out of 10, which is neutral. You can see tip rank very positive. Hedge fund has increased. So this is an article about the increase in dividends. So share Flowers rewards shareholders with 5% dividend hike. So it raises quarterly from 5% to 21%. Now, if we go over to CNN Business, based on their stock forecast, you have a high of 32, medium 29, and a low of 27. Analysis recommendations, you got 5 holds, 1 buy, 0 sells. Now, going further to CNN Business, looking at the top 10 owners of this one, you can see I always look for Vanguard and BlackRock, so you can see some of these they bought shares. Wellington Shields bought a large amount, about 6,000 shares. 6 million of that, so, which is pretty impressive. And then you got Southeast Assets bought about almost 1 million. And then you got some of the ones that sold. So now let's take a look at Webull. Based on Webull, their analysis is hold, pretty similar to the other one, 6%. You got 83% says a hold, 16% is a buy. Price target is pretty similar. You got 32 as the high, 29 as the average, and 27 as the low. Now let's take a quick look at Barchart based on their price target. Pretty similar. 32 is the high, 29 is the medium, and 27 is the low. Their analysis is also hold, pretty much a hold for the past 3 months, and you got 4 holds based on the analysis. Now if we go a little bit further to the fundamentals, you can see price to book ratio is about 3. You got price sales is at 1.23. Looking at the growth, you can see 3-year return is about 22, 5-year return is about 30, and you got your growth over here. 5-year dividend growth 31%, 5-year earning growth 36, and then over here on the side you can see the dividend. So you if you want to know a little bit more, you get paid on the 3, the 6, the 9, and the 12. So you can see 2, 2, 9, 4. So those are the months you get paid. Yeah. Now, looking at Simply Wall Street, based on their evaluation, you can see based on their calculations of share price versus fair value, they rate this as 50% undervalued, which is their fair value assessment is about 56. Currently it's about 25. Now if we go to the company overview, you can see Snowflake analysis, established dividend pay with proven track record. Some of the risks has a high debt and large one-off items impacting financial results, but that here are the rewards, the positive things about this. So that's pretty much it. For me, I think this is a pretty good company to invest on. I did put this on my watch list. I am going to start looking at this and see how much I'm going to invest on. I think it probably going to invest maybe 30 shares, and that's about it. This will not be a key player in my portfolio, but I do like it because of the current situation with the recession and everything. So that's it. Thank you so much for watching. Again, do your own due diligence. This is not financial advice. Stay cool, keep investing, and I'll catch you guys in the next video. Right? Take care. Aloha.